Hello traders, the title of this video is Buy and Hold Investing Specific Strategy Revealed about a trade. I recommend to traders to watch part 1 and part 2 before watching the third part. Let's get started. In this tutorial, we will be talking about mergers and acquisition, and also we'll be talking about latencies. All right. So when we are talking, first we're going to start with the acquisition. Acquisition, all right, is when you have one big company and maybe a small cap or medium cap company, all right, in the same sector, usually in the same sector. What is happening is that probably the smaller size company is competing with the bigger company. So the small size company has excellent management in place, all right, and they are gaining a bit of the market share of the bigger company. To avoid the competition with the smaller size company, the bigger company will decide to buy, okay, the smaller size company. That's what we call acquisition. So a bigger company, almost usually in the same sector, buying a competitor of a smaller size in the same company to avoid the competition of the smaller company. This is what we call acquisition. Those kind of acquisition can create excellent opportunity for investors that want to buy and hold. All right. So why? Very good question. The reason is if, for instance, a smaller size company. So now I'm going to draw something here talking about the market share. So the bigger company market share is this one. Okay. So they are in the same sector, selling the same thing, or doing almost similar businesses. But the smaller size company also got a market share like this. Though it's small, it's not letting go, all right? It's not just a baby you can push around. They have an excellent management in place, and they are competing with the big boy big time. And they are not afraid, all right? They are holding their ground nicely. All right? So the big boys in the bigger company looking at the smaller size company, eating in their plate, so to speak, don't like what they see. They say, well, we got in, and they have a lot of money. It's one thing you need to watch. If you have company in the same sector, all right, look at the company that have a deep pocket, a lot of money sitting, literally sitting on their balance sheet, like Apple stock. When we are talking about billions of dollars sitting on their balance sheet, all right. So the bigger company with a lot of liquidity sitting on their balance sheet, we go around to buy the smaller size company that are giving them a headache or that are taking their market share. So they will have what we call acquisition. Now, the good news is that sometimes, if for instance, the smaller size company has a bigger market share or substantial market share before the bigger company bought it, that bigger company, that will be a bullish, okay, advantage for the bigger company because now what is happening, they have increased their market share. You see, big time. So when a bigger company has acquired a smaller size company in the same sector because they have a lot of money, you want to see what kind of advantage, okay, that smaller company will bring for the bigger company. Sometimes those advantages can be a signal for a smart investor that have watched the first part of this series of video and the second part of this series of video. All right? This is about the acquisition, okay, investing strategy. All right. So you want to do other verification that we had discussed in the first tutorial, second tutorial, take into consideration everything that we have said before. But you want to play at the acquisition, those are the things you need to watch for. Okay. And if you see that that smaller company that they have bought has added more value to this one, no trouble. Sometimes they may buy it, but it will become a problem for them. So we don't want the video to be too long. All right. So this is about investing strategy, not in fact acquisition. We are watching acquisition to find excellent opportunity for our investing strategies. All right? Now, if we go back now to the merger, okay, the merger is different than the acquisition. So the mergers, okay, is two companies, okay, usually in the same sector also, that want to become because of mutual agreement. So the bigger one is not buying the smaller one, but they just decided to work together, common agreement. So those two companies will become one company, all right? Not because the bigger company has purchased the smaller size, it's a mutual agreement. So the management here usually will stay in place, and the management here will stay in place, but they will work under one umbrella as one company, right? But they are like a brothers and sisters of the same family, same business together, all right? Not two separate businesses, but one, okay, business under one roof, okay, under one umbrella. Those usually the management in place here will be running the business here. There may be some changes, but the management here also be here. Sometimes that those kind of mergers can be excellent opportunity, okay, for okay uh, the new group because they become now a new group. So if you're an investor that want to buy and hold, you can look for the mergers. So in a sector, so if for instance you have a sector, all right, and you have for instance 10 players, okay, 10 players in one sector, and they all kicking each other and so on, all right. They may say, all right, let's stop the fight, let's stop the madness, all right, so to speak. So they may decide to merge, all right, is to find common ground, a common playing field. Usually, those kind of merger can help sometimes when they are international company. They think that okay, it'll be better for like they have a Nixon. You remember Nissan and Renault? It's a merger. It's not acquisition. All right, Nissan and Renault, and also Mitsubishi, three companies becoming one company. Right? So sometimes those kind of mergers can create excellent opportunity for okay long-term investors. So what you want to ask, the question you need to ask is this: what are the advantages of the new group? All right, by coming together, are they becoming more powerful, more efficient, okay, more profitable, gaining more market share, or because probably they have a new technology here that those management here, okay, have mastered, and by adding that to this company that is probably a little bit a traditional business, a little bit old-fashioned, now they have closed the gap with other competitors. So by doing a merging activity, that could be helpful for the new group. So now you want to see what is happening, all right? So it takes time for a merger to settle. So sometimes it can take them 2 to 3 years before uh, the system start functioning correctly. Like in London here, they have was it accusation in fact? I think it was accusation between Lloyd Bank and Halifax Bank. Okay, you see them? Well, I think it was acquisitionism. All right. So this is what we are talking. So you want to see the advantage that that new group will have, the force that they will become, okay, uh, and how profitable that could be for them working together instead of working separately. So by learning, this is just an introduction to tell you what you need to pay attention to. So by studying more, okay, the implication of mergers, the advantage of mergers, all right, the disadvantage of mergers, all right, the disadvantage sometimes, this video is not about advantages or disadvantages of mergers, but the advantage, one of the disadvantages that sometimes the two companies are not working smoothly, they are not working harmoniously. So that could be a holdup for the company. You hold the company backward instead of being a something good for them. So they come together, but the two management are now designing a policy to bring the group forward together. Sometimes by merging, that could be the best strategy for the group, and sometimes it works beautifully. And after 2 to 3 years, they become okay excellent company together. So pay attention to the mergers and acquisition if you want to play also, all right, the buy and hold game. I need to mention to traders, so when we are talking about the acquisition, how do you play it, all right? So one company is buying this one, okay? You get it? So he's paying, that company is paying, all right? It's paying this one. All right? That company is paying the smaller one. It's paying for that smaller side company. It's paying it, it's buying it. Yes or no? It's buying it outright. Okay? All right? It's buying it outright. So what is happening is that it's taking money, is going out of this company. So what you will notice is the company that decided to, what you will notice is that those two companies, this one also got his share, call it share um, D, all right? The shares for this companies here, and the share for this company here, we call it C, all right? Now, as the discussion is going on, as it becomes now public news, the company C want to buy company D, all right? You see that if you figure out before it become public news, how can you figure out? Okay, we will talk about that in another tutorial. Okay, remind me in the comment section. All right, you can figure out different ways. It's not about hacking or doing something illegal. You're just looking at the sector. You can see some big player with a lot of money sitting on their bank account. And then when you are in an economy downtrend, or usually the smaller company, they are affected. So their share will become very small, very cheap, isn't it? But these people got a lot of money. So what do? Because they have a lot of money, and this company become very cheap, but they are good company, you go and buy them, you see. So what you will see, if you figure out before it become public, or if the new come out and you manage to get in at the right time, okay, this share of this company will start going up before they will complete, okay, their paperwork for the acquisition. So if you are a shareholder here, or you bought it, or you figure out that they're going to buy this company D, you take position as a buy and hold, maybe 1 year before. You are very smart, eagle eye investor, and you figure out, all right, that's cool. So that stock will start going up when it become public that is this person is going to buy this one. Why? Because this one is pouring money into this one account. This is what's going on. Money is coming out of this one. And this one, depending on his pocket, how much money they got, depending on how much they have invested to buy this one, okay? Usually, the company that is buying company D, the share will be going down because money, they spend money, so their value is going down a bit. So the share may be going down, while the share of this one will be going up. Are you getting the message of the acquisition? How you play it? Okay, the company that is acquired share is more likely to go up. The company that is acquiring share is likely to go down. All right, but sometimes depending on how much money they got on the balance sheet, it may not be a big issue. A few years ago, was he Yahoo has bought Terminal? Is he? Was he? Yeah, they bought Terminal. It was a bad purchase. It cost them a lot of money. It has affected Yahoo. Okay, Yahoo, Yahoo, Yahoo. All right, the search engine. All right, so so sometimes it may affect them big time and even cause them more problem. The company that's buying a smaller one. Okay, but usually it's good news for the company here as they are still completing the paperwork. The share will start running fast. Usually run very fast. Okay, so this is about the mergers and the acquisition. Now we're going to talk about the latency. Okay, very good example. Now, for this strategy, you need to understand it because the trader did ask me for specific example. But as I mentioned it, okay, in the second part of this series of video, I say to traders that if you learn something new like this, digest it. Just what I have noticed that sometimes a lot of traders that are purest technical traders or traders that are still behind, all right, usually they watch a video like this, they say, why do we care? Now, depending on their level, it's normal to react that way. Okay. Or you may say, George, is another story again. All right. But sometimes it's a mistake because what we are discussing here, all right, I must be speaking in my beautiful Texas accent, all right, is very, very important. All right. So talking about the latency, this is one example here. This is NVIDIA stock. So you can see here, I want to put a line there. This is about the latency. Latency. Is it correct? All right. Somewhere mid 2015, you see that the stock went above the moving average 100 and the moving average 50 went above the moving average 100, signaling to us a trend is brewing and the price start breaking prior high. That's how you know it's going up high. Prior high, start going above prior high. And display high lows, high high. So start going up big time. See here? So it's still in 2015, somebody bought it by a hole that was very smart, bought it at $21. Okay. Within 2 years, okay, talking about say 3 years, within 3 years, that stock went up for 21 US dollar. Look, went up to the zone of 292, more than 10 times its original value. It's a beautiful buy and hold strategy that's happening here. But something very interesting happened during the time is because there is another competitors to NVIDIA. This is what you want to check. So a group of stocks that are intrinsically competitive, all right, one of them is racing, going up very, very fast with a high momentum. Now, what is it telling us? The management is good and they are making a lot of money. They are smashing it, so to speak, all right? Big time. All right? Something's going on. So, what usually take place? A company like that, usually if they are blue chip stock, very popular stock in a particular sector, they create a feel good factor. You want me to write it for you? So you can start feeling good after watching this video. Okay. Feel good factor, all right? In that sector. And usually there is something that we call latency. So one company is having a good time. It's like your neighbor having a really, really good time. They put all their Christmas lights on. They are partying. They are now in Christmas mode. Somewhere, okay, by the 10th of December, what's going through your mind? You want to do the same thing if you are Christian, isn't it? So you start also thinking of Christmas and you start buying things, preparing yourself. So what is happening? Your neighbor starts celebrating before you. It's running fast. The celebration is swinging. Every Saturday there is a music going on, and they are cooking the best food and so on and so on. Maybe they invited you. So you start having that feel good factors. Not only you talking about stock, the investors that are buying this are loving it. They say, wow, look at this, how beautiful it is. So people start asking questions now. Which stock will be the next? So usually, depending on the balance sheet of other competitors and what they are going through, okay, talking about their business, they can benefit from this trend here. This is what we see. So the first competitor for NVIDIA is what? You know it. That's correct. That is correct. AMD. Excellent. All right. Are you in computer? That's correct. So this is what's happening to the AMD. So AMD, you see here, if I put the same bar there, okay, so if you're talking about mid, okay, here it is, all right, start going up also, but not as fast as, okay, NVIDIA was not enjoying itself as NVIDIA. If I look at this crash here, look at that, okay, okay. So we can say that from here, from mid 2015, all right, somebody may buy, let's call it roughly $2.25, okay. At the time we are here, you see, after how many years? See, 3 years, okay. So 2018, mid 2018, all right. See. The price only was at $17. It went up to $33, right? But it came back down to $17 from mid 2015 up to mid 2018, all right, or end of 2018, somewhere there. So what the investor were looking at, all right, you see this move here, you see this move here, is because of Nvidia price action. So this one was dragging its feet, was slow to move, all right, and finally, because of what was happening with Nvidia, they are in the same sector, they both are competitors. This is also a good company on its own. The market participants that were buying Nvidia were also itching, so to speak, to buy, okay, AMD stock. This is the effect of latency or feel good factor that is affecting another financial instrument. So if you are an investor that want to buy a hold, you want to pay attention also to the latency. All right, when two or more financial instruments that are competitors in the same sector, one of them is going up very, very fast, all right, and the other one, though it has a good business, still making money, no one is buying them at the same speed. Speed, all right, speed. So we have a latency. Okay? If the feel good factor remain in place in that sector, investors that were buying in Napoli to investors that were buying Nvidia, they will be interested. Whom you will also be interested, yes or no? You will be interested to buy also, all right? AMD. So you'll be checking the balance sheet, you'll be checking the cash flow. You'll be wanting to say, well, normally we should be buying this one also. Yeah. So, and then the same scenario is likely to happen. You see that Nvidia pulled back because uh, they didn't believe, okay, as much as they believe in Nvidia in AMD. So that's why if you look carefully, all right, AMD somewhere in 2018 they crashed back down. People took their profit very far because it's a capital gain play. All right, this was going on. All right, so just pay attention to that. That the latency can also create excellent opportunity for an investor that want to buy and hold. All right. So all in all, I don't want the video to be too long. All right, this is it. Okay, part three: buy and hold, investing, specific strategies are revealed. So to summarize this video, all right, it's very simple. All right, we were talking about acquisition when a company with a lot of money on their balance sheet go and buy their competitors. All right, quite often the competitor share will start going up, and the one that is purchasing the competitor share will be going down for a while. This can create excellent opportunity. But in the long term, though this one will go up and this one will go down for a while, in the long term, if the acquisition is an excellent or smart decision, in the long term, by purchasing the smaller company, that can create uh, more business opportunity for the one that has purchased. So don't ignore the fact that though this one is going down for a while, in the long run, if the investment that they have made by purchasing this one is a very good and smart decision, in the long run, their share will catch up again and start going up. So usually people who at early stage had figured out that this company is a good candidate for okay bigger company, they will take position and hold it and wait for the big company to come one day, banging on the door here to purchase it. And when they are doing so, before the general public start buying it, they are already in position and you may have double your profit or triple your investment. All right, this is it. The acquisition is a powerful tool. But what they are doing very often, they play it in a downtrend. Okay, so there was a trend, all right. There was a trend like 2008, all right. Financial, there was a trend first, and then as we see in 2008, the market we are in correction. Okay, market pulling back. S&P 500, 500 pulling back. Okay, everybody says bearish, 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 but these people know that the future is still good. They will be in business after the downtrend is finished. Now, the small boy that was causing them too much headache I was expensive before. Here it is, it's becoming cheap. Excellent management, excellent product, and they are gaining more market share. They are competitor. You have a deeper pocket, you go and buy it at a reasonable price. And those discussions will be going on. All right, this is what's going on. So if you are already in this position here, you are a shareholder here before these people come in to buy. Okay, you bought it at a good price before. Very, very important. This will start going up. Okay. In the case of the merger, the big boy we will try to seduce the small one, say, come, let's work together. Let's not fight. Or not even a bigger, sometimes it's two big company coming together. Like I was telling you, Renault, okay, and Nissan. Those are two big company in the same city. All right? So they can agree to work together as a merger, not acquisition, okay, under the same roof, okay, that will be beneficial for the group altogether. All right, this is it. This is it. And as I said to you, go and read, okay, about the merger, the advantage, the disadvantage, what to look for. Okay, this is it. The third scenario we were talking about the latency, and we were talking about NVIDIA stock, AMD belonging to the same sector, one stock gaining a momentum, running faster, all right, and creating a feel-good factor in that sector. What will be the next candidate that will benefit from the same market sentiment? This is about the latency. Though the next candidate is behind, talking about the momentum, they have a good business in place. All right? As always, everything we have discussed here is not as straightforward as we discussed it. There are more to it. It's about taking it in, all right, digesting in, okay, and then taking that baby step, crawling fast and going step by step until one day you get it right. And if you do master one of those things, or you are trying to do, remember this, okay, you don't want to gamble, you don't want to rush. Like I said to you, watch the first part, watch the second part, watch the third part. This is not about trading. This is about, okay, some position trader may trade. But if you want to play something for long term, it's better to have a portfolio. Buy and hold. Talk to your bank. Okay, some bank have buy and hold. All right. Okay, and that's it. Buy and hold at a reasonable price, and you are playing. You have done your homework as a smart investor, and you just stay put. And when the music has started, okay, you know that this is it, okay? And some investors that are good at it, they come away, triple their profit, even 10 times their initial capital. It's not all rosy, my friend. Sometimes you may do everything, all right? So that's why we are saying risk control is always important. You may do everything right, blah, blah, blah. Okay, you say, George, I watch it. Now I'm going to empty all my saving account. You are a guru. You say in your beautiful Texas accent, it was clear. Um, okay. Sometimes things does not work as one supposed to. If it's happening, okay, just cut your loss and go. So what I'm saying is that, okay, suppose you are somebody and if we do 5% of your wealth, okay, 5% of your wealth is $100,000, okay? That's your 5% wealth, which means we divide your total wealth, okay, into 20, okay, and it is equal to $100, $100,000, okay? And you want to play with that in the stock market. You say, all right, George, I want to be a long-term smart investor, okay? Now, so you do everything that you need to do. Okay, you practice, you done it over the year, you make some money sometime and so on. Okay, so what could you do if, for instance, okay, you've done your everything that you need to do, and the market decide not to smile to you, which means that what you were expecting did not take place. What do you need to do? You cut your losses. So the question you want to ask yourself, okay, say, how much are you willing to lose out of that of 100,000 that you are playing with in the financial market? What is your limit? What is your, okay? So you need to cut losses. This is what I want to say to traders. You may start applying this, or somebody may watch this video, and then next year may play with it and may work beautifully. That person may say, George, I love you so much. I'll kiss your feet and I'll kiss every hair on your body. Okay. Now, This is to make you laugh loudly, my friend. All right? Don't worry too much. Okay? So you can get carried away with that myself because the first one was successful. If the first one is successful, the second one also is successful, and the third one is successful, you're going to think that it's always like that. Okay? And maybe one day it's not the same. You need to make decision. But what is happening? A lot of people will learn something like this, and sometimes when things are not working as they expect it, they don't know what to do. That's why I need to tell you also that, okay? You need to cut losses. So the question is, how much are you willing to take if things are not working? If it's not working perfectly, how much will you call it? That's enough. I'm out. Okay. Or how long are you willing to hold it? So usually traders play only with 5% of their wealth. That's what I'm talking about. Okay, dividing your total wealth by 20, and with that you're playing with the mark in the market. Each sector again, that 100,000 you divide in 20, you won't invest more than 25% of that 100,000 in any sector. More, you will not invest more than 5% of your investing amount, which is 100,000 in one sector. Okay. Now, if how much are you willing to risk? How much loss are you willing? Are you going to wait until they wipe out all your 100,000? That could be something you are happy with. If that is you, go to our website and donate some money to us instead of wasting it. All right. So the point I'm making is that if things are not working as you expecting it, okay, you can decide to take the rest of your money and go away. For somebody, it can be large. I lost 10,000 now. That's it. I'm not prepared to take more. I made some profit in the past. Now my portfolio is red. It's now showing 10,000 loss. Okay, I'm going. You may take your profit. You may take that loss of 10,000. Okay, and then a few months down the line, you look back and say, "What stupid decision?" Because the market went up as you expected. You say, "Oh, I could have made a lot of money and retire." But while you are forgetting, all right, though it looks like you make a wrong decision, it could be worse also, which means you can end up losing 100,000, that's 100,000 altogether. But you made a decision to take the 10,000 and go away. But the next day, the market continued to go up. It was not a bad decision. It was just a smart decision. Sometimes things will work beautifully. Sometimes if it don't, well, you just look at it from the good part. It was not a bad decision. It was a defensive decision, a protective decision to avoid losing 100,000. Or you could look at it and say, all right, I could have made millions. Okay. But you haven't lost much. Another time, it could be that you make the same decision to take that 100,000 pound loss and go away before everybody. And behold, the market continue to go down. And you look back and say, wow, I was glad that I only lost 10,000. So you see now, so it worked both ways. At the end of the day, watch the first part of this tutorial in full, sit down, relax with your favorite drink, or like I say to traders, if you can't watch it in full, watch 15 minutes, okay, go away. Another time you have free time, watch another 15 minutes, catch up. And by the time you know, you watch it in full. Take note. Now, draw a plan. You'll never build a house. You see, we're talking about house now. Okay. You'll never build a house without a plan, isn't it? So you'll never see anybody building a house without a plan. They always have a plan, all right? I don't know why sometimes people come into the financial market and they don't have any plan. So as an investor, you want to have a plan. That's it. So you learn it, you master it before you start putting in place strategy to buy and hold. Have a plan. Like an architect, they have a plan to build a house. How many bedroom? How many kitchen? The size of it. Which way the windows should face? The same thing we do in the financial market. Have a plan. Whether you are day trading, swing trading, position trading, or investing trading. Last point, my friend. This series of video is not about trading, it's about investing. Now, position traders do use the same strategy for trading purposes because they have a deep pocket. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, you say, Joe, it's too long, 35 minutes, blah, 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 blah. Be sure to mark it down. However, if you think it's an essential tutorial that can help other traders out there, feel free to share it on your favorite social media. Subscribe to our YouTube channel. Our YouTube channel is George Trio. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. All right? Any comment, put in a comment section, please. And in due course, I will be recording another video to answer your specific question. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about buy and hold, investing, specific strategies, reveal Patrick. This is the end of this series of video about the buy and hold. In the next series of video, we'll be talking about sell and hold. Say, George, can we sell and hold? Wait. Next tutorial, stay tuned. We'll be talking about sell and hold. This series of video was recorded because of a TSTW trader asking essential question. It was not my fault, all right? I'm innocent, all right? He gave me the excuse to start babbling in my microphone. Thank you for asking an essential question and happy trading to you.